Good evening, morning, traders. We're going to cover today's Wednesday, August 16th recap. It is actually the morning of the 17th, but busy evening after the market closed. Was not able to get the video out, so a little bit late. But let's jump in and talk about what happened in the markets today and what we did in the account today. So a down day in the market. Continuing to push our third down week in a row, and broke some key support. So if we're looking at the SPY and we're really looking at this daily chart, you've got another lower low definitely happening here. But more importantly for me, we broke this 50 EMA, 50 SMA, either one, but I tracked the EMA. But you broke the 50 EMA pretty decisively yesterday. Intraday, it didn't look so hot. The whole day was down. We came up, bounced off of that, and then finished lower. So on the lower time frame, looked a little bit even worse. So you've got a pretty good downtrend going in this S&P here, or in the SPYs. And if we look at this channel, I think this is where we're going to keep an eye on right now, is this particular channel. And there's not a whole lot below it right now. I mean, you're below the bottom of the Bollinger Bands, which are opening up. Volatility's increasing. MACD's increasing. RSI's heading low, but we are heading lower towards an oversold area. So how low do we actually end up going? Not 100% sure, but we've broken this uptrend that we've had for a little bit here. But if you look at the weekly here and we go back to the October lows, we don't have a lot of points to hit here, but this uptrend, we're still well off of that. So we could pull back quite a bit more, probably somewhere in the neighborhood of 420 or so here, and still be in this overall uptrend that we started last year when we look at the weekly chart. So there could be a ways to go on the downside here. I would treat currently any up moves as nothing more than just a temporary bounce and then resume as we look forward here. So nothing telling me that we're done going down. I would be cautious to play any type of an up move as a bullish move in here yet, until we make a couple of, at least another higher low or two, and some higher highs off of this. So right now you've got a lower low here, bounced up, another lower low here, bounced up, lower low here. So you've got this definite trend channel coming down on SPY. So I think there's more downside pain ahead. Maybe we get a little bounce today. The great thing about, I guess, doing the yesterday video this morning early is we get a sneak peek at futures, and futures are up slightly. So 10 points up on the futures today, which is not going to overcome the down day yesterday that we had. But overall on SPY, we were down decently on the day here. And key is, again, breaking that 50 EMA to me is something that we've got to watch, and how much further we drop. Is it all at once? I don't know. Do we just stair step down like we've been doing? That's something to keep an eye on. On the Qs, pretty similar action. I mean, we are a much steeper uptrend. So getting to that uptrend is something to watch. On the weekly, we could easily get there a lot sooner. We're still well above the 21 EMA on the weekly. If we looked at it on SPY, it's right at this exact 431 support area here on SPY. If we look at the Qs on the weekly, the 21 EMA is sitting around 351, which is in the middle of nowhere here. But we'll see what happens. We're still in this downward channel, so we'll keep an eye on this and see what's going on. But tech's not quite as bad as some of the others. And if we take a look at what this looks like, you do have a little bit of a wedge starting to form here on the Qs. What does that mean? if you get a bit of a bounce today, and again, this is Thursday morning talking about Wednesday night, so we're getting some benefit of seeing the overnight action. I mean, there's going to be a bounce at the open, just a matter of does it hold or not. But you're in this descending wedge here. You've got some support coming up here, but you did break the 50. Let's see where all of these things converge. This was what Tesla looked like, if you remember from the other day. This is pretty much the exact same chart pattern as Tesla, which broke further to the downside. So this is this Tesla pattern with this wedge, descending wedge, and some support here broke through. And then if we look at the Qs, it looks like it's the identical type of a chart. So we're going to keep an eye on this level here. I think this 357 or so range, 357, 358 is something that we'll keep an eye on in here as a potential next stop. Other than that, there's some pretty good down area to go here. Not lots of support because we ran up so fast. This is really thin in here. And I think if we took a quick look at where we are on using some volume profile, which I'm not the greatest on volume profile, but I can tell you right now that if we break below here or this support here, this is really thin volume. So you could see it. You don't even need volume profile. I mean, you can look at charts and tell you the same exact type of thing is if you're not seeing this up and down nice staircase action here, you can see, hey, where we consolidate sideways, there's volume. Where we consolidate a little bit, there's some volume, maybe dating back even further than what we're seeing here. There's volume back a little further. But when you go up with these giant moves here and very little backfill up, when there's very little of that, you're going to have thin volume. And where there's thin volume, you can rip through these prices pretty quickly. So if we break through some of this area in here on the NASDAQ around 360, there's nothing stopping us to 333 or so on the NASDAQ. So that's a pretty hefty drop. We'll see if some of this area starts to hold in here where we have some volume, and maybe we can recover sideways a bit, and then we'll see which direction the market goes. However, it is definitely something to keep an eye on. IWM, if we look at the small caps and the Russell, obviously we still have one higher, a higher low, higher high, higher low, higher high, higher low. So this low here is still higher than this low. It's still not terrible, even though you've completely lost the 50. You're heading to the 200. But MACD getting very oversold. You crossed the zero line yesterday. RSI getting oversold. So it's accelerating. You can see it by the candles. You don't need volume or anything to tell you that. That's a big move down in one day. So a lot of ugliness on IWM. On the weekly, this is an area where you're pretty tight right in here with a ton of moving averages, but you're just flipping over. And I think if you can't hold this 185 range in here, you've got some more trouble on IWM, which means your financials are probably causing you some significant pain. If we take a look at what VIX did yesterday, so looking at the VIX yesterday on Tuesday, a pretty good pop up. Yesterday, a little down, but still some move higher. And you're seeing VIX starting to awaken a little bit here. So volatility is starting to come alive a fraction. It's still at 16, so not getting overly crazy. But if we're looking at the weekly, you've definitely got MACD and RSI moving higher. If this was a stock, you'd be possibly looking at buying this, potential up move here as you break through the 21 EMA, PSAR, bullish reversal, MACD, RSI, all heading higher. I'd be selling puts, underneath this $12 here if I was, going bullish on it. So bullish weekly possible bottoming in here. You can see this nice rounded base here on the daily. I don't know if it's exactly a cup with a bit of a handle going, but you can see that volatility, or the VIX, is starting to pick up a bit. So we're getting some volatility in the market. Yesterday, the dollar did pop up more. So this continues to be really my biggest indicator that I'm watching right now. The dollar is affecting everything. And this dollar, if we're looking at the weekly here, has definitely been making moves higher. It is now a very bullish looking move off of these particular lows. Now, in reality, on the dollar, you've got a downtrend that you're still in on the dollar here. So this downtrend channel, up, down, up, down, up, you still have, lower low, lower low, lower high, and then potentially lower high here. So we're watching the dollar. If the dollar can break above this whole little confluence area here, and I know there's a lot of lines on this chart, so I apologize, it's hard to see. But if the dollar gets above, this previous high back here, which is around 103.6, if the dollar breaks above that, we now have no longer no longer a lower high in this particular move. And then if the dollar gets up here at all around 104.8 or so, which is this line up here, I think this is where we're watching next. We'll keep an eye on that. But if the dollar gets up into there, then now we definitely have confirmed that we have a new trend, or we've broken this downtrend channel. So we'll get rid of some of these lines just because there's a lot of stuff going on here to clean it up a bit. But I think it's this line that I'm most interested in watching. What happens? Do we break that channel? Now, RSI is getting a bit overbought. Doesn't mean it can't stay there, but the weekly looks strong. And the dollar's affecting everything. So when you take a look at bonds here, bonds just continue to sell off. I'm not looking at doing anything on the bond side until we see what happens to this previous low, which we're slowly approaching this previous low down here. So we want to keep an eye on what's going on with this previous low. As the dollar moves up, you're seeing bonds moving down. When bonds are moving down, you're seeing rates going up. So as rates go up, and we look at the 10-year here on the TNX, you're almost back to this previous high that we set last October. This cannot be good for stocks. It's definitely not good for tech stocks at all to have, the bonds, the yields going this high. So you are at, 42.58 right now. And we'll see what happens today. But in a solid up move on bonds, on bond yields, and it doesn't look like it's getting too tired. We are not really overdone on RSI, and we're definitely seeing MACD continue to climb on both the exactly weekly and the daily. So strong look on bond yields, and the exact same thing is holding true here on the actual bond prices themselves. So I think we get more weakness. I'm still staying out of bonds. I'm going to be bullish because I think the Fed's getting close to being done. And let's see what happens when we get back to the support. Anything around here, I mean, it doesn't have to be to the penny, but we'll watch this trend. If we can get some support in here, which will coincide definitely with, a oversold RSI, then I think getting long TLT or TMF is a good opportunity there. I'm just not there yet. All right, so there's where we are. If we took a quick look at some of the futures, obviously we're looking at the morning here, but yesterday, as the dollar continued to strengthen, you saw the Aussie dollar just selling off more, sold off harder overnight, and is off its lows a bit so far today. Same thing with British pound. I shouldn't say same thing. A little opposite with British pound is this one has been inching higher for the last couple sessions. And then the euro, again, had been heading down. So the euro and the Aussie dollar pretty correlated here. The British pound, though, definitely not looking like the others. It's been putting in a little bit of a better base here. MACD upswinging, RSI upswinging. So you're seeing some definite improvement when we take a look at the British pound. So this one's a lot more bullish looking and a lot better looking than both the euro and the Aussie dollar. Oil yesterday had another pretty good down day. So we've had a nice pullback. We did break the 21 EMA. Overnight sessions got us right back up to it. So some selling in oil. So selling prices in oil, again, the dollar's affecting everything. As the dollar is gaining, then it's putting pressure on gold, it's putting pressure on oil, it's putting pressure on the markets, it's putting pressure on bonds. To me, it's you keep an eye on the dollar and you're going to get a good idea of where everything is going. When the dollar starts to tip back over and take a little bit of a breather, I think that's where you'll see a little bit of a bounce. Now, on the S&P, as we talked about earlier, I would regard any bounce here as an opportunity to get shorter. I don't think, but I think we're just in this no man's land. We got to wait and let some things clear up. So oil getting a little bit of a bounce in the overnight this morning, but a pretty good down day yesterday in oil, putting us right in the middle of this Bollinger Band. ATR, it's still fairly bullish. Good pullback. I think it was very healthy to see that in oil. I'm still bullish overall oil. If we look at gold, it did break through the bottom side of this triangle that we had been talking about recently. So I think it's something, again, to keep an eye on. It did get oversold on RSI and curling up here this morning. So let's see what happens. It's not enough to make me want to do anything right now on gold. I think you just keep playing this as a strangle and keep your strikes wide. And I think we can play any kind of oscillations going on in gold. You would think if the markets start to sell off that gold would be a defensive play that people could move into, and it has not been that. It has become very much correlated with the overall market. So no place to hide or run there. If we take a look quickly at the sectors yesterday, tech not down a whole lot. I mean, it was down, but not as bad as some of the other sectors. I think tech had a down day. XLY had a bigger down day. I mean, weakness in Tesla and Amazon yesterday really pushing the XLY down. And then the XLC had a pretty good down day yesterday as well. So all of these are still above the 50, except for XLY that broke through it. XLK had broken through it, but the XLC has not broken through the 50 EMA at this point in time. XLE, good pullback, 3 days of pulling back, which is great. I think we've had, higher low, higher high, higher low, higher high, higher low, higher high. As long as we stay above this previous higher low at 85, I think XLE still looks constructive in here, even though I think you're getting a little bit of a pullback. It's one of those defensive type sectors. And I think if you look at healthcare as well, you're seeing higher high, higher low, higher high, higher low, not a higher high. Okay, so we're going to keep an eye on healthcare, which is more of a defensive type sector. We'll see where this goes. Pretty good down day yesterday. Is the run over for healthcare, or are we just consolidating? There's just a lot of stuff up in the air, not getting too crazy, and just taking a look at a few of the stocks. Amazon dropped down to its 21 EMA and closed right on it for the day. In the pre-market, it's up just a fraction here for Thursday. Apple held up pretty well most of the day. Apple and Microsoft held up, the market for quite a bit until they finally gave it up. When Apple and Microsoft gave it up, then the market gave it up as well. So now we're back down to these lows. Got to keep extending these out, but this support area in here, I'm going to take this, we're going to leave this one on, I think, but It closed right on support here. Now, Apple this morning is almost flat, so there's really nothing going on in Apple. But you can see the MACD is really trying to turn around, and RSI has just remained oversold. So there's nothing right now telling you to get long, nothing telling you to short. You're just watching this thing consolidate in here, which is not the worst thing in the world. Where can we go next? Well, obviously dropping down, you know, 170 to 200's way down here. Can you get a rise up? One thing to keep an eye on is you can see the 21 EMA is crossing the 50 EMA here. Not a very good bullish sign at all. So it would take some work for us to get back up into here and reverse some of this damage. So for now, you are in a downtrend and you're going to stick there. Microsoft, same thing. You got the 2150 about to cross. You've got the 38 fib down here around 310. It's been holding in this sideways range. There's really nothing to support it in here at all. So I think we keep some eyes on the 50 area here as potential targets. Meta broke the 21, hasn't broken the 50 yet. It's not quite as bad looking as some of the other ones. Google, same thing. We have not even broken the 21 EMA on Google. NVIDIA, temporary break, and then moved up, and then slightly just starting to melt off a bit. I'm still looking at some point I believe we are going to try to fill this gap in here. So there's some down action to go on that. And then Tesla, we broke this little down triangle here. We're going to keep an eye on that as we go, see where things go. But we did manage to move through this previous gap area. So that gap's been filled, done. And now we look for any type of support areas that we can. I am not, not looking to get long anything in here. Because again, if we just are looking at the overall market, we're staying in this little tight range, this downtrending channel. We've broken this. We've lost the 50. We've lost the 21. They haven't crossed like they are in a couple of the stocks. I think we've got some more support areas down in here to fuss with. Let's see what happens. But I would treat any kind of a bounce as a potential opportunity that we go lower here as well. The only thing that would make me bullish and want to move forward on SPY or something at this point is you might have a bit of a head and shoulders starting to form, which would be, this would be the left shoulder over here, and then the head. So we would have to come down. I don't know that we have to come down a lot more, but maybe we come down closer to this support level that we've got here around 432 or so. We'd have to come down there, make a little bit of a run higher, and then if we break down lower, this is a definite head and shoulders potential to move to the downside. On the bullish side, if we just simply end it around here, you still have technically a higher low. Anything in this area here that maybe stays above this 437, I'd even give it here as still a higher low overall here. Then we could potentially resume higher. So we've got to stop some of the bleeding. But again, you stop, you're going to go up. I would not want to play this next up move into here. If that turns over and we get a head and shoulders pattern, then we're dropping down here into the low 410 or something like that range. So keeping an eye on potential head and shoulders forming on the SPY. There's where we are on that. Any bounce or move higher here would be very suspect to me. It would give you an opportunity at that point to get shorter. I don't think I'm going to get short right in here. I am hedging up. I will lighten up on positions a bit. All right, so I know that was a lengthy review of the markets, but I think there's a lot going on that you have to pay attention to in the market, and that helps dictate a little bit about what we do as portfolio managers here. So let's take a look at what we did yesterday. Deltas ran up again more yesterday. As the market sells off, our portfolio is going to get longer and longer delta. 0.28 is outside of my comfort zone, so we're going to have to keep working on delta. This is just like a weight loss program where we just can't seem to get the weight off and keep it off right now. We're struggling to get our deltas in line a bit, so we are going to have to get either lighten up, and we did a couple moves yesterday, which I'll talk about. Lighten up on some longs or add some short delta here. I do not like being long this delta, but the more the market drops, the longer or the shorter our delta, longer our delta is going to get. I'm sorry, the higher the delta is going to get. Theta is nice, up at 840.3%. Perfect spot for our theta. I just got to get this delta down. That net lick dropped on the day a bit as the market dropped down. And then BP use dropped a bit yesterday as we took a few trades off, and we'll show you what those were. Still around 55. I really want to lighten up on this BP. I want to get it under 50. So today may be some opportunity. If the market is going to bounce a tad today, it might give me a chance to remove some BP and get maybe a few longs out of the portfolio. I just want to be a little bit more defensive and safe here as a portfolio manager. However, we did manage to pull out another $483 out of the market yesterday on closing trades. So as we clean up some of the stuff in the portfolio and try to fix our delta and BP a bit, we're able to take some winners off and have positive adjustments going on. We are now up almost $5,000 on the month at the 17th of the month here. So halfway through the month, we are more than halfway through our goal for the month, up 1.75% for the month, and we have yet to have any 112s or strangles really come off to any great degree. So no 112s for the month yet. And let's take a look at where we are. So, and again, if I'm looking at the month, that I actually do have a 112, but not on ES. That's come off this month. But again, we're up 5,000, 20 winners, 6 losers for the month. So we're having a good month. Here's what we did yesterday. So we have been able to have some nice intraday 0 DTE trades the last couple days. So not getting back into this full time, but I think yesterday was a good call spread opportunity. I think you're in a downtrend right now, and we played that yesterday. The market opened down on any bounce, intraday bounce higher was an opportunity, I think, to put on a 0 DTE call spread. So we put it on yesterday, fairly low delta, took that off, $240 winner. Just a small winner to pay for some other moves that we had. I did take 3 leap puts off yesterday. So I took 3 of my leaps off because I wanted to reduce the long delta. So we took Oxy off, small winner, $80 on that. Yeah, still not bad. 16 days in the trade, 4.4% return on capital. I mean, I'll take 4% in 16 days. Not a huge gainer, but I just wanted to get out of it. Not that I don't like Oxy, and if you're in this trade with me, I think Oxy's totally fine. I think you've got opportunities to do it again, but I just wanted to get out of that. Tesla, I took the loss on Tesla yesterday before it really started to get going to the downside yesterday. So I took the loss on Tesla. I had these 2 winners. I felt good just taking a loser on Tesla, so I'll take the L, and it gets rid of that long delta and a trade that I don't really like. You know, we broke to the downside of that descending triangle, as I showed you. I don't really like Tesla here. Even though the leap is long-term out at 160, I'd be more than happy to own it at 160. I just think there's better things I can do with my money, and instead of buying hedges, I'd rather remove longs, because removing some of these longs fixes my delta, reduces my buying power, so I get a 2-for-1 in there. I could do the same thing by buying a hedge, but I would just rather reduce here and simplify the portfolio. And I did take a SPY leap off, fractional winner. I just wanted to get out and use that and free up again a little BP, but more than anything, these 3 trades were meant to free up long delta and reduce my delta. We also had a net gas 112 on. I was able to close the naked puts on that for about a 90% winner. So overall 88% winner on the net gas position. I only removed the naked puts, and I still have the debit spread, the put debit spread on net gas, which is very close to the trap. So we were well up over 100 and some percent. We were up close to 200% on this trade yesterday when I took the naked puts off. So the net gas, if we drop a little bit more on net gas, and this morning it's down fractionally 2.59. And we're at 2.57 at the top of the trap. So we are right sitting at the top of that trap. If nat gas drops a couple more, a couple more small points, maybe a 0.1, 0.2, something along those lines, 0.3, 0.4, I don't care. If we get that further selling on nat gas, we have time left in this trade to the 28th. So we have 12 days. Any further selling on nat gas is just going to keep increasing our gains on the put debit spread. So we got negative delta on that trade, and we're getting additional winners on that. So there's where we were on the day yesterday. We lightened the load. You'll probably see a little more lightening of the load today. May even close a few things for either losses or very little gains today. If I can get a 0 DTE trade, I will use that to offset any losses in the portfolio. But right now, overall, looks pretty good. You guys have a great rest of your day, evening, what have you, and we'll see you in the markets on the 17th. Take care, everybody.